provide value for you guys as realtors. And I think there's pain points that everyone experiences in every single industry. And so we're probably going to talk a little bit about some of the pain points that maybe you guys are experiencing right now and how we can address that.
No. Yeah. So Nathan, guys, he's our branch manager, and like Melissa had mentioned, oh my goodness, sorry. So like Melissa had mentioned, Nathan is pretty involved in almost everything. So yes, he's the branch manager and he oversees the operation of the entire branch, but he's also a salesperson himself, and he has his designated team for people that have worked with him that you already know. But for us loan officers, Nathan is always there as a resource. So that's something to keep in mind, is that, when you're working with one of us, it's kind of like you're working with all of us. That sort of family culture is something that we do have in our office. And thank God that we have that, because it's one of the reasons why I've been here for the past 3 years and haven't gone elsewhere, because that's one thing that you can find in others' offices, right? You can negotiate how much you get paid, and money comes and goes, but there's one thing that is difficult to find, and it's that family sort of oriented work relationship that I have with Nathan, and I know many of us upstairs do. So keep that in mind, okay? So about myself, I think I already shared with you guys. From the point that I was 18, I got my real estate license. Didn't do much with it because I was 18 years old. I wasn't like Jose, like Canelo. I wasn't that dedicated. I wasn't that serious with my life. So I was like Melissa. I was in the luxury retail world for a couple of years. Worked for All Saints as a sales manager, and then went on to work for Thomas Pink, which is it's a fashion house for Louis Vuitton, Moet Hennessy, selling suits, and with Nathan's wife, and she actually introduced me to Nathan. So that's an interesting story that I would love to share with you over coffee, because it's a long one. But no one walks into into their adulthood thinking, I want to be a realtor or I want to be a loan officer. And that's something we always kind of kid about, is no one wakes up and says, I want to be a loan officer, and I can certainly say that about my own life, that I never dreamt of being a loan officer, but here I am today, and I can truly say that I love what I do. I love servicing my clients, and it's a privilege to do so. So let's keep going here. So what we want to present to you guys today, or what we want to talk about, is how do we take a lead and how do we take it to our lender so that we can get them pre-approved and get them looking for a home, right? So let's talk about that lead stage. When you guys are taking that call, and this is, regardless of whether it's a referral from a friend, family, past client, or whether it's a Zillow lead that you guys got from online, the phone rings, you guys are taking that call, hopefully. Regardless of how it is, when you take that initial phone call, remember that you want to be yourself during these phone calls. And I'm sure you guys are going to have trainings about how to sell over the phone, this, that, and the third. So I'm not going to touch too much on that. But what I do really want to make some emphasis on here is that after you've taken that call, it'd be important to go ahead and give your lender the layup. Let them know, hey, I've got this lead, I've got this referral, and I'm going to go show them a house later this afternoon, tomorrow, this weekend, or whatever it might be. This is what they told me so far. Maybe share those notes that you guys have about what they're looking for, what their current situation is. And remember, your job is not to be the loan officer. You don't have to take the application. You don't have to ask them, how much money do you have in the bank? What's your credit score, this, that, and the third. That's our job. But your job will be to feel out the client. Where are they? Are they a first-time home buyer? Is it just going to be them that's going to be buying the house, or their wife as well, their partner, or someone else perhaps? Those would be important things for us to know. Or are they buying the house in cash? I mean, believe it or not, I've spoken with some of the realtors across the street. Sometimes they get a lead and it's a cash buyer. And depending on what that buyer wants to do with all that cash, maybe they don't have to use all their money to buy this property. Maybe they can use the bank's money, right? So give us a heads up. What we want to do is we want to make sure that we have time allocated to take your leads. What we don't want is we don't want you guys to call us and we're not able to service the client because maybe we're in the middle of a meeting, or maybe we're qualifying someone else, or we're on a call, right? So
That's actually, I want to just interject there a little bit. That's actually a really good way for you to get the lender on the phone on like morning. They're like, I want to see this property at 12 o'clock, whatever. You call or you text, the LEL or Nathan, and now they know you're going to pick up and you're going to have a client on the phone for them, right? And so a lot of the time you're talking about financing, the banks, bigger banks like Bank of America and whatever guarantee rate, they don't pick up on the weekends, right? You don't have that direct relationship with that lender, but you do when you're using a local lender. It's a good way for you to introduce your client. That's important, right? So sorry, I just wanted to mention.
No, that's really important what she said, and that's one of the things that is great about working with a local lender is that we're going to make ourselves available for you guys and your clients. It's not like when you're going to some of these commercial banks that they don't specialize in mortgages. They might specialize in servicing your checking, your savings, your 401k, or your IRA. But we only work with mortgages here. So we're dedicating ourselves to that specifically. And so if your client needs us to jump on a call or to meet us here at the office on a Saturday morning, Sunday afternoon, or whatever it might be, well, we can actually accommodate ourselves for that, okay? Or even in the evenings. I mean, I have a client coming in today at 7 p.m. Yesterday, I had one leave here at 7:30. So, we're able to make things work. And we know most of the clients, they're only available to see properties on the weekends. And that's when they want numbers for those houses, right? So that's one of the things that we can offer you guys, but it's important to give us a heads up so that way we're able to service all those leads for you, okay? So after you guys have already met them in person, you've met the lead, and now it's your client, now you're able to service them, you've made that connection at the initial showing. Now it's time to get them connected with the lender. So whether you guys called us so that we can speak directly with the client, you guys can always do like a conference call. Sometimes that's the easiest thing. These clients, they're working overtime as well, and so they get out of work extremely late. So if you've got them on the phone and maybe that's the only time of the day that they can, talk, hey, bring us up on a conference call. It's going to take 2 minutes for us to schedule a call or to schedule an appointment with them. And if you've got them on the phone, well, we don't want to lose them, right? So feel free to do that. Add us to that conference call, and we'll be more than happy to make that happen. So let's talk a little bit about setting the expectation for your client. Like, what can they expect if they're a first-time home buyer? They have no idea what they're going to need to get pre-qualified. They have no idea what speaking to a lender entails. A lot of people kind of have this trauma, right? That if they speak to a lender, it means they're committing to getting the mortgage right then and there. It's like, we're not going to make them sign a note the day that they call us on the phone. That's not how it works. But this is what you guys can ask your borrowers to have ready for that initial consultation, whether it's going to be virtual, via Zoom, or whether it's going to be in person. And for the most part, you guys have already heard about this. It's going to be their IDs, their pay stubs, W-2s, tax returns, and bank statements. We want 2 of everything for the most part, okay? 2 pay stubs, 2 most recent W-2s, and then 2 most recent tax returns and the bank statements with the funds to close, right? Some people have their money under their mattress. We'll talk about that with them. So let us handle that. But this is what you can ask for. Depending on what the client's residency status is, the documents that we're going to need vary. So that's why we have here, if you're a citizen permanent resident, it's a lot more cookie cutter. If you're non-permanent resident, you have a work permit, just need a few extra items such as your work permits, your current and your previous passports. If you have tax ID borrowers, we actually do have loan programs available for your borrowers that have tax ID numbers, that don't have their work permits, don't have their social security numbers, but they do make good money. Or maybe they're just a W-2 employee, but they have enough savings to actually purchase. It is a higher down payment. It's a 25% down payment. Most people that have tax IDs, they've heard about this already, and a lot of them already have that money saved up. They know that that's how much they need. But if they don't, you can just ask them for these 5 pieces of documentation, and we'll go through all those things with them. You guys can feel free to take a picture of this, but I will also be sending out an email for you guys so that you can just copy and paste when you guys are sending out these text messages, emails, or what have you for your clients. I'll give you guys a minute there. Got it? Yeah.
Confirm something that you mentioned before. So let's say we have a client on the phone and we, like you said, we don't want to lose them on the phone, so we want to tie you guys in. But what about like catching you guys off guard, right? Like, should we shoot a text and say, I'm with a client, I'm going to conference you in? Like, what's the best etiquette for it to be, you know, respectful of you guys' time and things like that?
So realistically, you can do that. You can do that. For instance, Jose does that with me. He'll send me a text message. He says, I have a client on the line right now. And when I see that text message come through, if I'm on a phone with someone, I say, give me 1 second. And most of the time, that's what we'll do. If we're on a call with somebody else, it's appropriate for us to say, can you give me 30 seconds to a minute? And we put the person that we're on the phone with, we put them on hold, and then we'll take the call with you. It usually won't take more than a minute or two, to book that appointment or whatever. So yeah, so you can shoot a text message or you can just call us directly. We're gonna pick up. Yeah.
Okay.
It's a really great question, and I think there's no one answer for it,
Yeah,
but I think it's all about expectation setting.
right.
So if you set the expectation to the client that this is a 24-hour service and let me get my lender on the line, then you're setting yourself up for potential failure.
Right.
So, you want to really lean on the relationship. Be like, I've got my guy. Let me just see if I can grab him. Oh, you know what? It looks like he's tied up on a call. I'm sure he'll call right back, as soon as he can. So it's all about just setting the right expectations, and then you're in good shape.
Okay.
Yeah, that's
And we
true.
will absolutely, and we're going to do everything we can to make you guys look like rock stars.
Yeah. So you want to leverage that too. We're going to make ourselves available, as much as we possibly can, but also leverage it, because most people, when they think about the bank or they think about, a financial institution, they think 9 to 5. They think after 5, you pick up the phone and call them. Well, you know what? Leverage that and say, I've got a really good lender and let me see if I can get a hold of him. You're going to get a hold of us. Okay. All right. So that actually segues into our next topic. So setting the expectation is extremely important for your borrowers, especially if they're first-time home buyers. They have no idea what they're getting themselves into. And so during the initial call, whether that's on a conference call, right, that you guys do, or whether, regardless of when that call happens, okay, this is what we would like to do. We would like to schedule the initial consultation. We prefer to do those in person. I'll be honest, there are some things that it's just much better to explain in person so that they can see it visually, so that they can look at our screen. We like to show them how the rate sheet works. I mean, we go in depth, okay? So it's important to have those clients in there in person. And let's be honest, there's nothing like looking at somebody eye to eye and talking about something as serious as the purchase of their home. I mean, this is the greatest investment that they're going to make in their lives, second to who they decide to marry. So it's extremely important that they meet us, whether that is, through Zoom or whether it's in person, but they want to see who they're talking to. We're not just some conference call place. We're not a call center. We're real people. We have families ourselves, and we want to be able to make that emotional connection with them as well, because we know in this day and age, there's a lot of loan officers and there are a lot of realtors out there, a lot of bad ones and a lot of bad loan officers as well. So that's why this is really important, okay? So when we get on the phone with them, there's two things that can happen. We can either schedule that initial consultation or we can pre-qualify them right there on the spot. We have some borrowers that, after a 20 to 30 minute conversation, after pulling the credit, after talking about income and employment, after looking at their assets and how much it is that they have saved, how much they're going to be able to apply towards down payment and closing costs, they're pre-approved in that instance. It's a pretty cookie cutter type of borrower. They're W-2. They've been working at the same place for the past 2 years. Credit is good. Numbers look good. They're okay with that final cash to close. They know how much they need to bring and they're comfortable with that. At that point, we could even issue a pre-qualification letter right there so that you guys can start showing that same exact day. But we know, you might catch them while they're on their lunch break and they still have to scarf down that Caesar salad. They may not have time to give us their social security, income information, this, that, and the third. So if that doesn't happen, We have some borrowers that are more tech savvy. Some of these Generation Z people that are buying houses like myself, we prefer to do things online. So you can always have them do that as well. They can always type in their information through our online POS, and we can get back to them after they've submitted that information. Okay, sure.
So I think also with the initial consultation, it's important that your loan officer builds a relationship with your client, because then instead of coming to you for numbers or any clarification when it comes to those kinds of things, you really want to go back to, you want them to talk to the loan officer about that.
Right.
But another thing is not everyone's ready to buy right now, right? Some people need to work on their credit, or they don't have enough cash, or it could be so many different things. But what I really like about our infrastructure is that if you bring a client to us and they don't have the credit, to purchase, and if they don't have purchase power right now, we have so many systems in place to keep them going, right? So we help them work on their credit, and then we have a follow-up for them. And the idea of that is, so after working at the agency, I saw that you guys are all go, 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 right? You get so many phone calls through Zillow and through leads that sometimes you guys forget about your clients. Naturally, we're human beings, we're not computers, right? So what we did is we developed a system so that, if that person maybe isn't ready right now, but they will be ready in the next 2 to 3 months, your name is also attached to that client. So we can call and say, hey, Nini, guess what? Mrs. Smith, she's ready now. So go show her this weekend, right? That's like the best phone call you can ever get.
Yeah.
Because you're like, oh my gosh, she's Mrs. Smith. I don't remember her. And it's like, and that's okay, because, like, you're still connected to that person. So we'll send them right back to you.
Yep.
And I'm just looking at it in terms of when I see like best practices from really successful real estate agents, they allow their client to have that relationship with loan officers. I see the other side of it, where I have like real estate agents who, they want to have ultimate control. They don't want us asking for W-2s, taxes, and that really hinders their ability to close on that client and lowers their conversion on that. So I just wanted to get you guys to keep that in mind. Another thing, if you guys are new, go to as many you don't have to go to the consultations, but go to them, because then you're gonna learn the process. You're gonna see time over time how the loan officer is walking them through the process, and then by the time you've gone through it a couple times, you meet a new client, you're gonna know the right questions to ask. You're gonna go, you know what, that's important. Let me ask this before I even move forward, right? So just things to do.
Like, is it also just sort of like showing that, I just want to make sure I'm interpreting correctly. Even if you're not ready, we're still invested in your desire to like buy a home. Is that kind of what we're trying to like make it clear? Because like we don't want to just write people off just because they're not ready right now. And so is this sort of like an opportunity for us to like give them time where they feel like they still are connected and supported by you guys and have the tools? Is that sort of the intention?
Yeah,
Oh,
yeah,
100%.
absolutely.
Perfect.
Because I've heard Eliel say this, I've heard Nathan say it to people, where like our clients, and you think about it on the mortgage side of it, right? We want their business forever.
Right.
So this is not going to be their first or their last interaction with a mortgage company. So it's important for us to really understand their financial landscape, right? And so if they're not ready right now, but they need to, or maybe they're not in the price range that they want to be at right now, right? Because, let's be honest, you've got to overbid right now. So you can't show a client who's pre-approved for $500,000 a $500,000 home. They don't have a chance, right? Mm-hmm. So, you've got to know how to facilitate that. So, okay, you're not ready right now, but I'm going to make sure that you're comfortable and ready 2 or 3 months from now. And that's not to say that you guys shouldn't follow up and reach out to them. I just found that because of the amount of leads that you typically get, you have your referral leads, you have your company generated leads, it's a lot to handle sometimes, right? So, it's just like another layer. It's another set of eyes that's keeping track of that same client, is what I'm saying.
Yeah, and that's what's wonderful about having a good relationship as well with your mortgage loan originator, your loan officer, is the fact that we are, for the most part, referral based. I can say that about my own business, is that I'm referral based 100%. Up until we're kind of experimenting with some things, but I've had borrowers that are not qualified, and still to this day, they're not qualified. They're still working on their credit. There are some things that they need to do. But those borrowers that are not qualified have already referred 2 or 3 different clients. Could you imagine? And one of those is qualified, and one of those is ready to go. And why is that? It's because when we're going through this initial consultation with the borrower, when we're looking over their credit, their income, their assets, remember CIA, guys, it's about their credit report. And yes, it is a hard pull. A lot of people ask, is this a soft pull? Is it gonna hurt my credit? The most that I've ever seen it go down was 2 points. So when someone starts freaking out about, I don't want them to pull my credit because it's going to, 1 or 2 points is not going to completely disqualify somebody, right? Your interest rate won't even change until you reach, the next level or the next tier in terms of your credit. And that's every 20 points, something actually changes in terms of their mortgage insurance rate or their interest rate, okay? So yes, it is a hard pull. We're going to talk about their income, their employment, and their assets, their down payment, and their closing costs, right? And this is a teaching moment, guys. This initial consultation, I was here yesterday, an hour and 30 minutes with the client. I've spent up to 2 hours with the client because it's a teaching moment. After we have that initial consultation and I send them an estimate, I might have to review it with them. It might take 2-3 minutes, but because the client knows what those numbers are. They already know what closing costs are. They know what reserves are. They know what an escrow account is. They know how this stuff works. And at the end of the day, when they walk out of here, they're dreaming about mortgages. They're dreaming about mortgage insurance premium and all this stuff because we talk their heads off. But we want to make sure that they truly understand it because, like Melissa said, at the end of the day, we don't want them asking you these questions. We want to make sure that they can come back to us and say, hey, I want to talk to Eliel, because he's the master at this. He knows what he's talking about. He's the teacher. He's the one that can tell me and explain these things. And I can tell you this, even if that client walks out of there and they're not ready for the next 6 months, or they're not going to be ready for another year or even 2 years, they're going to be referring us clients, and those clients are going to go back to you guys. So that's the important thing to note here. And we're not going to abandon them. We're not going to ignore their phone calls just because they're not ready now, right? We're going to nurture them. We're going to care for them. And we're going to give them a step-by-step guide so that they know what they need to do exactly so that they can be ready. And so, we have clients that, their credit is unfortunately so low and it's so damaged that, something as simple as us, simulating what would happen if they open or close a credit card, that doesn't cut it, right? It might say it's going to take another 2 years for their credit to get up. Well, Annie Mac is actually partnered with a company called Credit Evolve. And this company is I believe it's a nonprofit, if I'm not mistaken, but it's a nonprofit essentially that works with people to repair their credit on a very deep level. So if you've ever heard of these companies that, work to get late payments removed, disputes, and things of that nature, that's what they do. And I'll tell you guys, this is a success story. I had a client pulled their credit. They were at a 540 credit score. Had to give them the bad news, but I gave them the good news that Annie Mac partners with this company, so we referred them over. And they did their initial consultation. It's not a free service, of course. It was $90 a month that they had to pay. They followed the instructions, and in 4 months, I'm getting an email from Credit Evolve saying their credit is ready to go. They're at a 640, and we were able to make their dreams come true. 2 months later, they were at the closing table, buying the house of their dreams, $450,000 purchase, but because they followed our instructions, right? And so what was that $90 investment for 4 months, right, in comparison to the house of their dreams? And, we have countless success stories about that. I mean, we have clients that walk in and they're thinking their credit score is shot, but it's really only 20 points from them actually qualifying. And all we had to do was maybe, update their credit score. Maybe a credit card was just paid off last week. So it's simple things like that. But the client won't know that they have to make changes like that until they speak to the loan officer and until we actually pull their credit. So for anyone that is saying, no, I don't want to get my credit pulled because it's going to hurt my credit. Well, listen, we could, you won't even know what you have to do until you get your credit pulled. So that is the importance of getting your credit checked. Okay, guys. So that's an extremely important meeting that we're going to be having with the clients. And like Melissa said, you're going to learn a lot yourselves by being at these meetings. And And, if you guys are ever here locally at this office, then don't worry. I don't mind, walking a couple steps across the street to go meet with them. But like I had mentioned, some clients, they might be in DC, they might be in Virginia. Traffic is a little crazy. We might have to do these meetings via Zoom, but it's just as effective via Zoom. We share our screen, we show them what we're talking about, and the clients have a better understanding of the process. They have a confidence that they know what's going on in the market as well. So that's another important thing to know, is we're going to review the options for them. What's the most suitable program for these borrowers? One thing might work for you, Aziz, and then another thing might work for Melissa. You might need a renovation loan. She might just need an FHA or a government loan, right? One person might need a down payment assistance program. Another person might just need to go with a higher interest rate, right? So there are different options for different clients, different scenarios. And so that's one thing that we want to go over with the client is, what options do you have? I mean, I had a client in here last week that was thinking about doing a renovation loan, right? Because, they want to get a good deal. Who doesn't want to get a good deal? And so we went over how Annie Mac does offer renovation loans. And I gave them a success story about how I had a borrower that purchased for $330,000. They did $30,000 worth of repairs. They put 3.5% down. And then when we got the appraisal back, the appraisal came in at 390, and they walked into their first home with $40,000 in equity. Can you imagine? We made their dreams come true. And so that's a possibility for your borrowers too. And there's a plethora of loan programs that we can offer to them. But we don't just want to talk about loan programs and what's available to them. We want to talk about what's happening in the market, especially in a time right now when there is a lot of headlines that can, take your sleep away. You won't sleep if you're reading those headlines. Well, we want to make sure that we're that voice of comfort for those clients. They want to speak to a professional, and they want to feel at ease about the investment that they're making. And so we are going to address each and every single one of those doubts that they have in their mind. And that's the importance of that initial consultation. That's something else that we do, okay? I mean, we have clients that they're not getting cold feet. And the reason why they're not getting cold feet is because they have a mortgage loan officer that is not just a loan officer, but we're an advisor to them, and we're advising them about this investment that they're going to make. There's financial advisors that tell you, where to put your money in the stock market, what it is that you should invest in. Well, we're debt advisors to them. We're telling them, hey, yeah, this is a debt that you're going to take on, but this is how you can leverage that debt so that you can either walk into 40,000, 50,000, 60,000 in equity, or how you can better put yourself in a better position, when rates drop, right, and prices continue to go up. So we're going to be advising your clients on what the best practices are as well. So that's how we're going to set them up for success. There are these two things that we're going to do, aside from telling them about how they can or what the best practices are for when they're shopping. There are certain things that we tell them. The number one thing we tell them is listen to your realtor, because they are the professional, right? If they listen to you all, they are more than likely to get under contract. But if they want to have it their way, and I'm sure some of you have had clients like that are a little hard-headed, and they think that they're the professional, well, we will be advocating for you as well constantly, okay? We want to let them know that, hey, we're the professional when it comes to the mortgages, but when it comes to the house shopping and how you should be structuring your offers, listen to your realtor, because they are the professional. They don't hand out these licenses, right? You have to earn it. So another important thing that I want to talk to you guys about is setting up your clients for success with a financing commitment. Usually this financing commitment, what it means is that the file or the application, it's going through underwriting. Usually once we have a ratified contract, the underwriter is reviewing the file, and they're giving us a list of conditions that need to be fulfilled. And that commitment letter, what it says is, it says that we are committing to providing financing for the client so long as these conditions are met. But it means that they've reviewed the file. Not just myself, not just our processor, but our underwriting department, okay? So that will set your client apart from the rest of those people that are out there offering on that same exact house.
Actually, let me ask you a question. So, have you guys ever had a deal fall through because of financing? No?
Yeah.
All right. what would be some examples of reasons why they fell through?
One guy, did go and buy a car right before closing.
Mm.
And that didn't work in his favor. Another same issue all day, they had the cash to pay the car off at closing, so they did that and it worked out. Another person misunderstood how much money he was supposed to closing. And he spent half of his money, and so he just didn't have the cash. One fell out a few years ago, interest rates changed and the loan officer hadn't locked the rate yet. And the client had never been given the option to lock the rate like specifically, so that didn't happen and they lost that loan because they couldn't qualify at the higher rate. I've seen financing fail for leases attached to contracts that weren't discussed upfront. Like your client has, and we touched on this yesterday in training, I think your client may have an approval for say 400,000. But maybe that approval doesn't include additional money for HOA or solar panels lease that's a couple $100 on top of that maybe. So then that could blow the financing for sure.
Okay.
Or if there's a problem with the house, I've seen VA has failed homes that have like mold in it, for example, they have very strict requirements.
Okay.
So those are some reasons.
So some of those, I guess, are kind of outside factors, may or may not be able to be controlled. Some of it could be coaching and just asking questions up front to make sure that they don't make a mistake during the loan process. Have you ever had a case where they just simply weren't, like the loan just gets denied, DTI is too high, their debt to income is too high, they don't make enough money, anything along those
I've had
lines?
that happen, but usually they get saved because either we go high enough up the chain to the right person that can get it through, or we take them to a different lender that can finish it.
Okay, gotcha. So that's kind of more where I want to touch on and what Eliel is speaking on. So every bank operates a little bit differently, and consumers don't understand that, right? Like they're trained to believe that the lowest rate is what's right for them. And as realtors, you guys know that that's not the name of the game. The name of the game is just loan to close. that's the most important thing. And then of course, how smooth is that process going to be? You're in the referral business. You want to make sure that your clients walk away from that table feeling good about the experience, and oftentimes the lending portion of it can be a nightmare, and that, while it has nothing to do with you, can reflect poorly on you, right? It's like it sucks because it's like guilt by association, right?
Yeah.
And so that's where we really work hard to set you guys up for success. We're also in that referral business. You guys are our clients just as much as the client themselves is. And so what Eliel is speaking about here is not a pre-approval, it's a full-on commitment letter. So, we actually take our clients through this process, and we really started pushing hard in this mode during the pandemic, because the pandemic has just driven up the market. I mean, it was 20, 30 offers in some houses. And so how do you differentiate amongst literally a sea of offers? And so, a couple things, and one of the main things that we did immediately was we started sending all of our clients through underwriting upfront. So we won't wait to give you a pre-approval letter. We'll give you a pre-approval letter the moment we feel that we're solid, but we're going to take that one step further. And we're going to send it into underwriting with a TBD address to be determined, right? We don't have the address yet. So you guys can be looking for houses, even looking at houses in the meantime. And our goal is hopefully by the time you're writing your first offer, we're actually presenting an approval certificate. Are you going to touch on that, or?
Oh, you can keep going. Actually, that's great. I was going to give a testimonial, but go ahead and finish, because he didn't even see the presentation, guys. So this is like divine intervention right here. Keep going.
So again, it's all about differentiation, and so we will provide an approval certificate that's going to you can submit with your offer. So the listing agent looks at this like, well, this is different. What's this all about? So the purpose of that is to drive them to talk to you about, well, what is this? Or you can lead in with that. I even have an agent, they put together a BombBomb video when they submit the offer, and they actually talk about this process. And they say, hey, I just want you to be aware, this loan is fully underwritten. It's not a pre-approval. We actually have a commitment, and I just wanted you to be aware of that. Our preferred lender here, he does this on every one of our clients. And so if you're concerned about whether or not financing is going to fall through, that is pretty much not going to happen. So you can talk differently about your offer, and then we'll oftentimes come in behind you and we'll do the same thing. We'll reach out to the listing agent. So engage us in that process when you're submitting your offer, because we want to, again, we see this as a partnership and as a team. We're trying to increase conversion on ratifications so that you guys aren't showing 10 different houses or submitting 10 different offers, showing 100 houses. We want to increase that conversion rate. So that's one of the ways that we're doing that.
Awesome.
Yeah.
Are you advising people when they do that to then waive their financing contingency entirely, or are you not allowing that?
Great question. You could. We don't advise it just because we want to let you make that call, right? But yeah, it's always a little bit scary. But I mean, for example, if it's an FHA deal, I mean, if the agent doesn't really know their stuff, then they may not realize that you can waive the financing contingency. It's still pretty much baked into the contract. So, if you're not dealing with a seasoned agent, you might get away with that. Same with VA. But no, I have cases and I have clients, we do where they're like, look, can we do this? Because this would really help us to secure that deal. And we say, well, yeah, technically you can. And so in those cases, we would want to have that loan underwritten more recent than later, right? So, if it's been 3 months and you still can't find anything, then before we kind of go in with that, let's make sure we have the most recent stuff, that nothing's changed. They didn't suddenly drop on hours at work, or they didn't suddenly spend their money. We'll want to look at a couple things to make sure that we're truly solid. But it's absolutely a conversation point, and we could do that.
Yeah, and not only do the commitment letters help, but it's also the communication. So funny enough that he was talking about this. So this borrower, the Vasquez family, him and his wife, they actually won the contract for the house that they wanted. And they won this contract while they were competing against cash offers. And so not only did the commitment letter help, but the fact that we were closing in 14 days did as well. But more than that, it was the fact that we were giving the listing agent consistent and clear communication. I mean, it was kind of interesting, this file, because we actually submitted an offer 3 times. First time it was too low, second time it was too low, and then the third time we submitted it with the commitment letter, 14-day closing, and we got it accepted. Now, we wouldn't have known, what it was that the seller was looking for specifically unless we had actually communicated with the listing agent. And that's what worked. When I spoke on the phone with the listing agent, I said, well, listen, we just submitted this file into underwriting. I should have a commitment letter, by Wednesday. Is that going to be soon enough? Because I know they were presenting their offer. She said, if you can get that to me by Wednesday, I think that'll really help. But the point is that we spoke to the listing agent, and we constantly followed up. Whenever it was that we were submitting an offer, the first 2 times, we followed up. How does that offer look? What do you think? And so that's how we were able to make this work. And when you look at the reviews that the listing agents leave for us, you'll see that that's the number one thing that they point out. Is they say communication. Communication is what we got from Annie Mac Home Mortgage. This is what we got from Eliel. This is what we got from Nathan, from Azadine, from Zaki. This is what we got from those loan officers. And it's something that's lacking in the business, as many of you guys know. The worst thing is when someone doesn't pick up the phone. At least tell me you're going to call me later, right? So that's how we make the big difference for our clients, okay? We find a way to make things work.
How does that work with the appraisal?
What do you mean?
How do you issue a commitment letter in an offer before the appraisal is done?
Sure. So actually, as I had previously mentioned, so the commitment it's the lender saying we're going to commit with the following conditions. Yeah, with the following conditions. So that's where, like Nathan said, we're going to let you guys make that call on, whether or not you want to waive financing contingency or not. Hopefully you guys did your comps. And it's not always about waiving financing contingency. I've had conversations with listing agents where they said, it wasn't we accepted this offer not because they waived everything, No, we did this because, the buyers were flexible. They were willing to work with us. And so communication is what makes things work in this business.
Yeah, a lot of times we'll talk about speed, like, we'll ask them the question, would it be helpful for you if we were to close fast? Some people are saying, oh yeah, that'd be amazing. And others are saying, well, to be honest with you, we kind of need more time.
Yeah.
So we're like, okay, well, financing is done. So at least you have peace of mind. And it does give them that peace of mind. And then we get ratified that way. So
Yep.
yeah, it's a great point. Just asking the questions, oftentimes as asking them, what do you need? Like, how can I serve you? They'll ask me the question. I see on the offer here 21 days for financing. Do you need 20? No, we're good. Actually, I could probably get it to you in the next 3 days or 5 days, or no, I don't need that much time for the appraisal. We can condense that. What would you like it to be? So we're just having that question, and if it's unreasonable, we'll say, it's a little tight, if I'm being honest, but I would feel comfortable here. And so just that healthy exchange and just that honest conversation oftentimes makes the difference.
Yeah. So
How are you guys doing that?
So-
How do you operate?
so
Do you
listen,
use a
When you walk out of here,
company? Do you have
take a
in-house
left
people that
past the
work here?
elevators. And
Yeah,
another
great
left.
question. So we have a dedicated appraisal department, but it's not an AMC, right? So we don't have an outside, yeah. So it's not an outside AMC, and we've seen it all too often, right? Where these outside AMCs are just collecting a fee, and they're low bidding, just looking for the cheapest bidder or cheapest appraiser in town, so they can make more money, and so you get what you pay for. So we've always believed in paying the appraiser as much as we possibly can, because that's ultimately going to make them happy, and they're just happier to work with. It also kind of drives them. It's more of a relationship based thing. So we do have a whole a pool of appraisers, and we're nationwide, so we work all over the country. But at a local level, if for example, we've got some appraisers that we've been working with for years. So we're like, hey, like we want to make sure that they're on this panel, and we know their work, and then they get graded. They get graded not just on how quickly they're accepting the orders, but how quickly they're getting those back. Are they submitting them early? Are they late? How many conditions are we getting back and forth? All these things impact. So we're scoring these appraisers to make sure that they're performing. And so, yeah, we still don't know who it's going to go to for compliance, obviously, but we do feel confident that the appraisers that we're working with are of higher caliber. Mhm.
How are you handling multiple offer situations, like in this type of market where you're getting a lot of offers on one particular property and then it's overbid price? Like I notice clients will ask, they're concerned about overbidding on a home that they feel might not be worth that price, but that's the market that we're kind of at the moment. So how are you handling that kind of situation when you're speaking with the client?
Yeah, so it's all an expectation setting, right? So as much as I'd love to be able to guarantee that a house is going to appraise, we can't. And so, yeah, you want to make sure that you really understand those comps and are advising the clients accordingly. I have a case right now, supposed to close on Monday, and the appraisal came in 8,000 under. Now, in the grand scheme of things, it's actually not that far off. So, the initial knee-jerk reaction, and I was explaining this to the agent and to the client, is like initially there's always this emotional, like, what the heck, what's going on? But then when you actually look at the comparables, you look at the data, and then you start really understanding it, then you're like, oh yeah, that one did have a fully upgraded bathroom and ours doesn't, or you start to understand some of these differences. And so what I found is that I really try to ensure that, my team understands how to read an appraisal, how to understand the appraisal, and also how to try to communicate that to the client. And because a lot of times it's, if you're in that situation, it's just a lack of understanding is usually what kind of sets things off. I've had many conversations with the listing agents and say, hey, and so the approach that I found that works is not coming at them and attacking them and saying, hey, like, what did you expect was going to happen? It's more like, hey, you know what? We're having an issue with value and we really want to make this thing work. Is there any comps that you could show us that's going to maybe help this thing? We're going to try to reconsider this value. We're going to send this back and see if we can fight this thing. So it's like being on their side of it. And as a lender, I do the same thing. It's like, hey, I'm on your side. I want this thing to happen. So help me help you, right? So you guys know the comparables better than I do, I'm sure. So is there anything you can provide that's going to provide assistance? And then what I find is that more times than not, there are none. There's no comparables that actually supports the value that we're under contract for. And so a lot of times I've gotten listing agents to acknowledge that, and because you give them the opportunity to defend themselves. And oh yeah, look at these comps. Yeah, but the problem is those are 2 miles away and we have comparables in the subdivision, right? And so you have to be educated about how to read an appraisal and what appraisers are looking for in order to address that. So we're going to help you in that way. And I've won listing agents to send business to us after closing deals that they had to lower their price to their clients with. So, but I think that can be attributed to just communication,
Yep.
right? Like what you were saying is,
Yeah.
Lack of understanding oftentimes leads to, miscommunications and misunderstandings. But
Yeah.
And I wanted to say, so you guys are going to have a training, I think, within the next week or two. It's called Buy Now, Sell Later, or Cash to Keys. And I want you guys to attend that because that is one way that our organization is trying to solve the problem where the current market is. To answer your question, like what are we doing with the challenges that you guys are currently having? Is we're trying to solve that problem. And in a quick nutshell, buy now, sell later means that you can have a listing or a seller who can buy their home first, move into that property, and then sell their property. Or you can turn a first-time home buyer into a cash buyer so that you're competing with a cash offer, right? So those are the kinds of things that, our company, AMAC, is doing to support us here in this market.
Yeah, another thing that I would mention about what Nathan was saying. So that would be like worst case scenario is that the appraisal does come in low. And if your buyer is the one that's kind of worried about the value coming in lower, and the comps, are good, but they still don't want to offer more. Actually, we have tools in our arsenal so that they can visually see how much the house is going to go up in value. I mean, when we look in retrospect, on average, it's about 4 to 5%, depending on the area, that the value is going to go up on average every year. I mean, last year was, I think, greater than 12% is what the value went up. But on average, when we look, over the past 10 years, on average, it's 4%. And so that's how we can reassure the client that, hey, this house is going to be worth more than what you're offering. I mean, I had a client a couple of weeks ago, didn't want to put an offer in because of that. He said, no, this house it's never going to be worth more than 480, and he was so sure that the house was never going to go up in value until we visually showed him. But that he was just a visual kind of guy. I had to pull up the chart for him so that he could see, hey, look, how long are you planning to stay in the house? He said, I'm planning to stay here for 10 years. I said, look, in 10 years, you're going to have 200,000 in equity. I said, in a year from now, you're going to have 30,000 in equity, and that kind of put him at ease so that they would be able to submit the offer. So that's another thing that we have in our arsenal as well, to kind of put your clients at ease, because they don't know these things when they're first-time home buyers. They have their own notions in their mind, and sometimes you need to check those notions in order for them to be comfortable with the process.
Yeah, I definitely had to do that. Like the buyers I have now, they're going to close next week, and they already have 25,000 in equity.
Wow.
And the crazy thing about it is, when we started on March 1st, he wouldn't sleep. Like he was calling me, texting me, like all the time, like just were like, can we just not buy the house? And the comparables were low. The comparables were like 589 or 550 actually, and the sale price of the home is 601. And they're like really terrified about the fact that there's such a big difference, and it's a new build community. So like, why is this such a big difference? And then when we went to see the superintendent yesterday, and we looked at the numbers, and we already didn't even go to closing yet. And the higher end of the comps are now $625,000. So he was like so much put at ease in that moment. But in the moment, it was just a really complicated situation to navigate through. But it came out on top. But I just know that's something that we're probably going to have a lot of issues with, especially with first-time home buyers. So we want to just make sure that we're on the front end of it throughout the whole process, so we can ease their minds as much as possible.
And talk to us about those things, because sometimes, like definitely use your resources, because we, like he said, we have all these tools. We have one that I really like called the cost of waiting, right? Where it really shows them like, okay, if you wait to purchase your home, this is what it's going to cost you. And then that goes for title as well. Like, it's okay that you guys don't have all of the answers. You're not going to. No one does. So if you don't know the answer to a question, say, you know what, let me call my buddy. He's gonna walk us in the right, point us in the right direction. Just keep those scenarios, those things in mind, and call us and communicate with us so that we can help.
So, potential client, they're already pre-approved. They're asking you all these questions that I think will benefit from these presentations that you have. How do I kind of bring that business to you guys and say, because if they're asking me these questions, they're obviously not getting the answers from the current lender. How do I be like, okay, well, I know you got pre-approved by this lender. How do I kind of bring that to you guys?
It's a great question. You want to answer?
So yeah, I'm gonna let her answer it, and then I'm gonna give you guys my take. But
So I used to have a training on this. So you discuss the pain points, right? So listen, when you're gonna go and you're gonna purchase your home, you want to be secure on everything that you're doing, right? So you have all of these questions. These are questions that your lender should be answering. My preferred lender, the guy that I always use, he's always talking to my clients about this stuff, and he's gonna make you feel really, really comfortable about taking the next step. Why don't you just talk to him, meet with him, and get pre-approved through that lender and see if your experience is different? And that's it. And you on the phone in the moment if you can. Because the thing is, we're in sales, right? So people are driven off of emotion. So if you have that client in front of you in that moment, you want to make as much happen, when you're with them, in front of them, as much as possible. And that goes for us too. We train our team in that way, where if you have a client and you need to get their W-2s and their taxes and all these things, try to get as much as you can in that moment, because that's kind of hard. You got to ask the right questions and say, like, do you have access to your taxes? Oh, no, I don't. I'm going to have to reach out to my accountant. Okay, why don't you give me your accountant's information? I'll send them an email, CC you on it, so they can directly send it to me. So it's like, how can we become more efficient, right? People love stories. They love testimonials. So if you have one, that's how you're going to be able to, guide your clients to your preferred title company, lender, home inspector, whatever it is. And it is so important that you have those folks on your side, because it's going to make the transaction easier for you. Within the next 30, 45 days, you're going to be able to have all of that volume and all those transactions and not feel like you're all over the place and you're coming to settlement 3 days before and there's a big problem and now you've got to get involved, right? So the way that you reduce those things from happening is by partnering with the right people.
Yeah. One of the things that is the most common, it's the most common comment, I guess, that you would say that we get from a lot of rescue deals, like what you were saying. Sometimes that financing was about to fall through, but you had to switch to another lender. And, at our office, we have a lot of those, what we call rescue deals, right? That we had to rescue from another lender that didn't do their due diligence. You guys know due diligence, right? Your due diligence, that's one of the only things I remember from being a realtor. It got engraved in my mind. I got engraved in my mind. I let my license expire, but due diligence has not expired. So, there are lenders that are not doing that. They're not explaining these things. And when I'm meeting with a lot of my clients that were pre-qualified supposedly with another lender and come over to work with us, the thing that they say to me is, you know what? I'm so thankful that I came over to you, because that other lender did not explain any of this. A lot of times it's a couple and they look at each other and they say, that other guy didn't explain any of this to us, And so I think, there's a fine line between you kind of pushing them towards us, and then you kind of advocating for us, but also on their behalf. Because what you should try and explain to the client is that, it's in their best interest to work with a lender that is going to be advising them and that is going to give them that communication, that follow-up that they need. Because if that lender's not explaining these things now, what makes you think that they're going to explain them later?
Yeah.
You
It's
know?
like you're advocating for exceptional service. like, I want to make sure that you have a really good experience. Because they get confused too. Like when you get your reviews at the end of your transaction, sometimes they lump in the title company, the lending company, and the realtor all in one review, and they'll leave it on the title company's website, but they're really talking about the real estate agent or they're talking about the lender. So that's why it's important that everyone's aligned.
Yeah.
What if there's an objection, let's say in, like his situation where the client is pre-approved and they're like, oh, I don't want to run my credit again. Isn't there like a 30-day window where you can switch over? How does that work exactly? Like they say, they fear running your credit again, pulling your credit another time. So that's one of your fear with switching to another lender. How would you handle that situation?
Yeah, so I always know someone has good credit when they're asking that question. You know, that's a surefire way that they have good credit. And so I always commend them on, you know what, I'm glad that you brought that up. Like you clearly have great credit, you want to protect it, and we absolutely would want to do the same too. But there's also a misnomer about that. Credit doesn't drop drastically due to poor credit. That's what people think. And the reason they think it, actually, does anybody know why? Why people make that conclusion? So there's so many like apps out there that tells you your credit score. So this is what happens. Well, Bank of America says I have an 815 and you just pull my credit, I have a 740. Like, I can't believe my credit just dropped. See?
Yeah.
I told you.
So, correct. So I love having these conversations with them because I start asking them questions. Do you know how credit works? And I start engaging them and like asking them and testing their knowledge. And then, almost every single time they actually don't know how it works, but they're basing it off of something like that. So I educate them. I was like, and I use myself as an example. So I refinanced last year and all of my credit card apps had me over 800. When I pulled it, I was a 766. I'm not complaining with the 766, but that's 50 points off. So I tell myself as a story, I was like, listen, these things, and so it's all in the fine print because I was also like, what is up with that? So if you look at the fine print, like on whatever website you're on, they'll say, no, but that's my TransUnion score. I was like, no, it's not. It says that they're getting data from TransUnion, but they're basically calculating through their own methods and algorithms and best guess of what your score is based off of information that they're getting from TransUnion. That is not the TransUnion score. So they're like, what? I was like, yeah. Look at the fine print. Like click a few clicks away and you'll find that that's actually what it says. And so again, storytelling is a great way. I like to share stories of either myself or other clients to give these types of examples. So some of that's going to be with experience, but that's also what we're helped. But to answer your question, it's a really, really good question because again, what's being put out there is rate. Or some people think name, right? I don't know. Annie who? Like, what is that? Like, and I'll call it right out. I was like, yeah, I didn't hear of Annie Mac either until I came working for them. But let me explain how this works. Roughly 50% of all mortgages in the country are originated from banks like us, not from the big banks. In fact, those big banks buy the loans from us. Yeah. And then you like talk to them about their experiences as a bank. Be like, so, let's talk about XYZ Bank. Like, so you've been a customer with them for 20 years. Like, so what's your experience like with them? What hours are they open? What kind of service do you get? Have you ever, they're starting to push you to calling an 800 number these days. You're never talking to the same person twice, ever. And you always have to repeat yourself over and over. You have to escalate. I mean, it's the same process all the way through. The mortgage experience is even worse. There's not even their core business. Their core business is banking. So of course they're going to offer mortgages. Why wouldn't they? They've got thousands of people coming in their doors every single day. They would be stupid not to offer the product. It doesn't mean that they're good at it.
Yeah.
So we'll kind of talk to them on that level just to, again, it's like asking them, like whenever you can ask them questions about their experience, they'll usually give you a reason why, and so maybe for this client, it's service. For this client, it might be, something else. I don't know, what kind of objections do you foresee coming up having that discussion?
One would be the credit thing. Like, I don't want my credit pulled again.
Okay.
Or don't feel comfortable giving away my information again. I mean, I'm totally new, so this is something that if
That's fine.
I mean,
Yeah,
I was in
tell me
I
your
was in
point.
this person's shoes, I would ask those questions too. Like,
Sure.
those would be my reservations.
Okay. And those are valid, right? So then you can go in the direction of, you know what? These guys are my preferred lender for a reason. Just have a conversation.
I was
You know?
gonna say, at that point, can you then point out, like, although you've had this information, well, do you feel supported by your lender and do you fully understand what's going on? Because that's really the most important thing here. Like, can we bring them on that way? Because I think ultimately too, like, people fundamentally want to feel respected. They don't want to feel like they're just being told. And I think it stands out that you guys are focused on teaching the people because it's like, it's not just like giving your money. It's like, let's explain how this is gonna work and why you should do this. And so I think even offering, it sounds like if they are worried about numbers, it might be a good idea to just bring up the fact that there's education with this and that there's support and that even if things don't go how we want right away, there's continuity involved and follow-up involved. And so can we, I guess, is it logical to lean on some of that other stuff when people are bringing that money? Because like you're saying, so if they've given their information to the lender, but the lender's been no help to them, lender hasn't been accessible, they can't talk face to face, they can't learn about anything. Just the mere, fact of like, I'm gonna come here and be taught and respected, is that ever kind of just,
Absolutely.
Yeah.
Absolutely. I think it's
Yeah.
a great point. I mean, it kind of speaks to that customer service and,
Right.
you're offering that service, right? You're like around the clock, like 8 o'clock, 10 o'clock at night, like texting and calling and, showing houses on a whim. So, it's the same type of thing. And so, yeah, like what we notice is that, yeah, you just give us an at bat and we'll knock it out of the park every time. And so, yeah, so I think it's like, very non-invasive, even if they're giving resistance, it's like, you know what, just give them a shot. Talk to them for 30 minutes. If you don't think there's value there, okay. Yeah.
And also you're listening to your clients too,
Right.
you're listening to their needs.
Right.
And in that way you can pinpoint what direction to kind of take them in. If you feel like if they trust you, then they will definitely go in the way that you want them to go, but ultimately you want to go for trust in your clients. And if you're listening to their needs, you'll know, is communication important to them? And you can lean on communication. Is
Yeah.
being in person something important to them? You can lean on those things when you're talking to your clients. That's great.
Yeah.
You can also lean on their intelligence and their concern about their finances. So if they're only talking to one lender and they're afraid to talk to another one, but they are concerned that they have the best interest rate, that they have the best numbers, they would be doing themselves a disservice if they didn't shop with another.
You're right. It's like going to a specialist.
So you think about that, like, hey, you're a smart buyer, you know your numbers, like, let's just make sure that you're doing the right thing here.
Yeah.
Can you guys correct me if I'm wrong? I've always been taught that there's like a 2 or 3 week window that as long as you're pulling in the mortgage realm, that it's only one hard pull that changes the number by 1 or 2 points, and the next 7 or 8 or 10 within that 2 week doesn't touch your score at all. Is that not true?
It is pretty true. Yeah. So yeah, you pretty much, the bureaus haven't come out and given like a firm timeline, but it is pretty much true. I've seen that, they just had their credit pulled. I pull it, it's exactly the same score. So yes, I mean, you can absolutely say
Because
something
it
along
works for
those
like a
lines.
boat and a car and a house.
Correct.
Yeah.
But I usually tell my clients that you can roll 100 if you want to in the first 5 days. It's only going to pay you once.
It's
Am I allowed
treated,
to say that?
yeah,
How
it's
long
treated
ago
as
is-
one credit pull.
Okay.
Yeah. Yeah. So like a lot of times,
Okay.
Yeah.
I heard 30 days. So
yeah, I've heard anywhere from 2 weeks to 4 weeks. So I usually on the conservative side, if I'm going to say something, I'll say, well, there's a range. So, but it was just last week, so we're good. But yeah, it's treated as one credit pull. Sometimes you'll see like they shop for a car and there's like literally 20 different credit pulls on there, but it's actually it's all treated as one credit pull. So for scoring purposes.
And then I explain that to clients, like, the government allows that because, just think about it, if your score was to tank every time your credit got pulled, consumers would never shop around, and they would get taken advantage of by everyone. They would people would know that they're only willing to do an application, and that lender would say, okay, that'll be a
Yeah,
10%
so
interest
you
rate,
know.
you know, money, you know? So
Love
the
it.
government allows, that's my understanding is that
Yeah.
that's why.
That's exactly right. That's exactly right. And so I'll take that one step further. And I was like, now, if you're out there having your credit pulled every month and you're looking for every discount at Macy's and Lord and Taylor, yeah, eventually that's going to catch up to you. It's going to start impacting your score. But no, I mean, let's be honest. How many times have you pulled your credit this year? Once. Oh, what are we talking about?
Let me ask your opinion on this. I've heard some people lately, some of my buyer clients have said, well, you know, I got my pre-approval like 6 months ago or 4 months ago, whatever, but like we're still shopping or even some people that haven't gotten it at all. And they're saying, well, you know, I'm afraid I'm not going to find a house. So I don't want to have to go reissue my pre-approval every 2 months and pull my credit every 2 months. So I usually tell those people that it's also a trust thing, right? So you get your pre-approval, interest rates might change, so we might have to confirm that later on. But as long as you don't go out and spend all your money or buy a new car or quit your job, I'm comfortable showing you houses on this stale pre-approval, provided that you're not over here like making ridiculous decisions. And that's a personal choice, but sometimes it lets clients feel more comfortable that I'm not gonna come over here asking them to update, you know, every month. How do you guys feel about that?
Yeah. So
Or should they come back every month and refill the credit?
we like to engage with our
Yeah.
clients during that whole process, right? So we kind of stay on top of checking in maybe once a week, every 2 weeks, just, hey, how are things coming along? Like, how's the home search going? So it's really about that customer service and relationship build. Is why we do that. But yeah, to answer your question, your credit report specifically is good for 120 days. So if they don't do anything, they didn't open up a new credit card, they didn't get a new car, they didn't miss their credit card payment, you know, if nothing material has changed, then we can use that credit report for the next 120 days. Realistically, that means that around the 90th day is when it's going to kind of be up for renewal, because it's going to take most of the time 30 days to close a deal. So so around the 90th day is when we want to start thinking about whether or not we might need to repull credit. So what I wouldn't want to do, or what I would say standard practice, what we do is if we're getting close to that time, let's say we're in the 85th day of the credit report. So we still have some time, or maybe it's the night, I'm sorry, not 85th, like 100th day or 110th day or something like that. And is it likely we're going to close in the next 5 to 10 days? No. So at that point, when you're submitting your offer, we'll probably repull the credit at that time to make sure before you send that offer that they didn't do something stupid. But that would be the only time that we would repull the credit. We'll certainly talk to them. Hey, did you do anything different? You know, nothing's changed. Okay, we're good. You know, if you can, send me an updated pay stub just so I can kind of monitor and make sure everything's good. Send me an updated bank statement if you wouldn't mind. So we can just make sure that nothing's really changed. But no, we don't need to go through the whole process all over again. Like, it's really meant to be like not as non-invasive as possible.
Yeah. And that's why we coach so much at the beginning of the process, so that they're already prepared for this. They already know, okay, let me not deposit, you know, this lump sum of cash into my bank account. Let me not go shopping around for a jet ski, you know. So that's why we do those things up front, and we prepare them. And we have that conversation. That's one of the ways that I kind of rebuttal the whole, I don't want to get my credit checked again. We let them know we're only going to check it once, and it's going to be good for another 120 days or 4 months. And, you know, we give them hope. You're probably going to find the house before those 4 months are up. It's not like we're going to be checking it every single month or something. That's sometimes like the fear that they have, you know. So that's one thing that I like to mention to them, and also explain to them the value. Like, even if their credit score drops 1 or 2 points with us checking it, what are you losing? 1 or 2 points. What are you gaining? An entire team that's going to be working on your behalf, you know?
If 1 or 2 points disqualifies you, maybe you should not be buying it.
Right.
Yeah, no, definitely.
Well, actually, so one of the things that we do quite often is we'll work with their credit to show them how they can improve their credit. So that's another value add, is that we can't do that unless we pull their credit.
Yeah.
So they might be at a 615, and most lenders say, sorry, doesn't work.
Yeah,
And
it stops there.
They walk away just feeling like, you know, there's nothing left to do, and they're defeated. And we're like, no. Listen, if the answer is not yes today, we're going to give you a clear roadmap on what it needs to be yes. So if it's 3 months, 6 months, 1 year, like we're going to show you, and I tell, war stories or horror stories or success stories of clients, have come out of bankruptcies and foreclosures and short sales and crazy, things on their credit and how they've been able to buy their homes, refinance their homes, or maybe they're on their second or third home by then. So we do that quite often. Right?
Oh yeah.
They might be at a 620 something, and we're like, you know what? All you got to do is pay this credit card down to $15 and leave this one, and don't touch this. Your credit's going to shoot to 660. That's going to actually save you $4,000 in closing costs because of what it's going to cost you on the rate. And so, so those are the types of things. I guess think of this like as advisors, as opposed to like a rate guy.
Yeah.
And to them, it's like free advice.
It's free
right?
advice.
Like that's free advice.
Yeah.
Oh, yeah.
So, and
Yeah.
you can market it like that to the client.
Absolutely.
Like, free advice to get you where you need to be and support.
Do you want to do local lending or do you also?
We're
do
nationwide.
states? Nationwide.
Yeah,
also.
so we're not in all 51 states, but we are in like 47 states or
Mhm.
so.
Awesome.
Mhm.
That's good to know.
Yeah,
New York is one of them?
Yep.
Awesome.
Mhm.
Do you lend on land?
we do. Interestingly, but not the way that you're thinking. So,
What about
not movable.
That's not a focus of our target.
Yeah. So on land, so we have, so he talked about renovation. We also have another product. It's called construction to permanent. C2P is the short term thing, but we kind of shut it down during pandemic. It's kind of a high risk product, but on a case by case, we are visiting that again. I have a client actually that just today came in, and he's putting an offer in on a lot, and he wants to build a house. So the cost of the build of the house is probably going to cost him. He thinks on the upper end 600,000. He thinks he can get the lot for about 200. Worst case scenario, all in it, he's in it on $1 million. So we can lend up to the county loan limit, which in this case in Montgomery County is going to be 970. He can put as little as 5% down, and it's a one-time close. So he'll go to closing, he'll purchase the land, the seller will get their funds for the land, the realtor will get their commission for the sale, and then you'll get the commission also for the sale of the land. And if we structure it right, then you could also get a commission on basically the whole thing, right? So that just comes down to negotiating that and talking that out with the builder to make sure that that's built into their margins. But so that's our construction to perm, and then they have 10 months to build that house. So and if they never do anything with that loan, it's a 30-year fixed mortgage.
So if they never built the house, they just start paying.
Well, they would have to build a house, but if they never refinance, or if they don't so that loan, on the day of closing, it's a 30-year fixed mortgage. So it's not like there's some banks that offer a construction loan, and it's like a phased approach. It's like, all right, first there's this period, and then there's this period, and then you'll get locked into your 30-year fixed after everything is done. Well, who knows where interest rates are going to be then, especially in this market. So it's attractive to most people to know that it's a one-time close. Like you just go in, you go out. If you never do anything, that's it. The builder has to be reputable. I mean, and by reputable, I'm not talking about, building 100 homes a year. This is really targeted for the smaller builder that's probably doing 5 to 10, homes a year, but they have a reputation, they know what they're doing. So we will go through a vetting process to make sure that builder knows what they're doing. They also have to be kind of financially liquid to make sure that they can actually do the project. But when we go to closing on that day, we have the scope of work and everything mapped out. As they hit different phases, then they'll get draws. They'll get reimbursed and actually the renovation loan works very similarly. So you go to closing, the house is in disarray, and then as they hit different milestones, they'll get a draw to get replenished so that they can keep moving forward with that project.
When do you